Today we're going to be going over the 4 best dividend stocks in July 2021. Let's get into the video. Hi everyone, my name is Zach and welcome back to Finance Bro. Before we get into the video, I'd like to ask you guys to please comment your favorite dividend stock in the comment section below, and also consider leaving a like and subscribe as it really helps with the YouTube algorithm. And if you guys want to start investing in dividend stocks and you have not made an account with WeBull yet, what are you doing? You got to get in the pre-market and after hours with us. All you got to do is make an account with WeBull, deposit $5, and you can get 2 free stocks that are worth up to $2,300. First link in the description. But with all that out of the way, let's get into our first dividend stock for today, which is going to be OKE. So OKE is in the energy sector and is located in Tulsa, Oklahoma, and it basically engages in the gathering, processing, storage, and transportation of natural gas in the United States. Bit of a tongue twister there. As you can see here, they're sitting at about $57, up 3% of the day, and the thing that I really like about OKE is that it still has a lot of growth throughout the past month to 6 months. It has seen a lot of growth, but it still pays a very high dividend that we'll get into in a second. But something that you really want to look for in a dividend stock is for it to trade up in the long term, especially on Yahoo Finance's little chart here. You can see that they're supposed to go up in the midterm and long term. So not only are you going to be getting paid out that dividend, you are also going to be getting growth in your portfolio as well. Obviously, they have beat on 2 of their last 4 earnings per share, earnings per share at least, and then they also have a earnings call coming up August 3rd, and then as for financials, they have been going down recently, but quarterly their revenue has been picking up a lot, and that's why they've been seeing a lot of growth, especially in the last year. As for a recommendation rating, they are about a 2.7, which is between a buy and a hold, but really with the dividend stock, as long as it'll either go sideways or up, that is fine. And as OKE actually pays a very high dividend, as we'll get into in a second. Analyst price targets have OKE at about a $57 for a price target with a high of 68. Obviously, it's currently sitting at about $54. And if we take a look here at their dividend and dividend history, their ex-dividend date, their last one was April 23rd, and their annual dividend is about $3.74, making the dividend yield 6.75%. So say you are investing $100 into OKE, you should on average every year get about $6.75 back. Obviously, if you put $1,000 in, you'll get $60. If you put $10,000 in, you'll get $600. Etc. So one thing I also want to point out is that their PE ratio is 22.38, which is very good for a dividend stock. It's on the lower end of the price to earnings ratio. So if we come here and take a look at the financials, as you can see on the income statement, they did take a bit of a step back, but if you look quarterly, they have been increasing their revenue every quarter, which is very good. And then if we take a look at the statistics really quick, they have 11% profit margin, which is good when you are paying a dividend. And then if we take a look at their balance sheet is looking a little bit bad, because I like to see more current assets, but at least they have more current assets than current liabilities. And then total debt, they're sitting at about $14 billion, but that's not really too bad. As long as they're paying their dividends out, I'm a happy man. The second dividend stock that we're going to be talking about in this video is going to be ticker symbol MO, or Altria Group, which actually operates in Richmond, Virginia, and they basically, through its subsidiaries, manufactures and sells cigarettes, oral tobacco products, and wine in the United States. If we take a look here, you can see they have about an $87 billion market cap, so pretty big market cap. P ratio of 20, which is also pretty good for a dividend stock. Earnings per share about 2.33. Obviously, Yahoo Finance thinks they'll go down in the short term. That could be because they're paying such a big portion of their profits out to shareholders. But if you want basically just dividend income and don't care if it trades, if the stock trades sideways, MO is going to be a good one for you. They beat on 3 of their last earnings per share, which is pretty good. They have another earnings call coming up July 29th, which is going to be coming up once this video comes out. As for revenue, they have increased every year, and earnings is back on the upward trend this year as well. If we take a look here at the recommendation rating, Yahoo Finance has them between a buy and a hold, but closer to the buy. And then price targets, they have MO at about $54 and $68 when they're currently at about $47. So overall, pretty good upside here. If we take a look at their dividend history, you can see that they have been paying dividends quarterly for a while now. And they pay about a $3.44 annual dividend, and that comes out to about a 7.35% dividend yield. So basically, if you invest $100, you'll get $7 back. If you invest $1,000, you'll get $73.50 back, and if you invest $10,000, you'll get $735 back. Their PE ratio is 20, so that's very good. Overall, MO might have a little bit less growth than, say, OKE, but they do pay a higher dividend, which is good for some people. Next up, we have my personal favorite, which is going to be Realty Income Corporation, or ticker symbol just O. They do have a market cap of about $26 billion, and they're basically a real estate company. Their PE ratio is a bit higher at 70. You don't really like to see that, but they are a very hyped up stock right now, and they have been seeing a lot of growth recently. They do have a short-term performance outlook of green, and then long-term of green as well, so that's really what you like to see. They haven't beat on any of their recent earnings calls, but they do have another one on August 2nd. Revenue has been going up for the last 4 years, as well as earnings, and then obviously they just had a record quarter in terms of revenue. And then the recommendation rating is between a buy and a hold as well, but at 2.2, closer to the buy. Analyst price targets have Realty Income at about a $75 to $84, so a good amount of upside within the next year for Realty Income. If we take a look at their balance sheet, they only have about $690 million in current assets compared to $990 million in current liabilities, but in all these dividend stocks that pay a high dividend, you're really not going to see, very good balance sheets like compared to say Apple. But total debt, they are paying down their debt, which is a good sign to see. If we take a look at their dividend, they pay an annual dividend about $2.08 per share. That comes out to about 4.14% dividend, but the really cool thing about Realty Income is that they pay out monthly. So you'll be getting paid out every month, about 4.4%. So if you got $10,000 invested, you'll get $400 per year, and that'll get split 12 ways, paid to you every single month. Finally, we have JP Morgan, and this is a more stable stock that is going to trade a little bit more up and pays less of a dividend, but has a $471 billion market cap, a P ratio of 12. That is grossly underrated. So basically, the P ratio of 12 is pretty crazy for a bank, especially. Their next earnings date is actually July 13th. It's coming up here soon. And then obviously long-term performance outlook, it looks green. They have obviously beat on the last 4 quarters in terms of earnings per share, and revenue is sitting at about $102 billion, and quarterly revenue has been seen to go up, and earnings are going up as well. The recommendation rating is between a buy and a hold, but closer to the buy. Analyst price targets have this between $167 and $200, currently sitting at about $155. If you take a look here at the financials, you can see that total revenue is about $120 billion, and if we take a look at the balance sheet, you can see that they manage $3 trillion in total assets, basically super good. They also have about $3.1 trillion of total liabilities. Total debt, they have about $426 million. That's nothing compared to their total assets. you take a look at their dividend, they only pay a $3.60 dividend, which comes out to be a 2.34% dividend yield. So not a high dividend yield, but this stock is going to be a lot more stable for you and is honestly pretty undervalued right now at a 12p ratio. But yeah, that's pretty much going to be it for the 4 best dividend stocks in July 2021. If you guys did enjoy, please leave a like, comment, and subscribe, as it really helps with the YouTube algorithm. Comment any dividend stocks that I might have missed. And yeah, my name is Zach. I'll see you in the next video.